Welcome to the Nexus International University Academic Series. Today, we go beyond the basics, into the sophisticated inner workings of modern banking, advanced commercial banking systems. By the end of this lesson, you will understand how banks truly manage money, risk and technology at scale, and why mastering these systems is the mark of a true banking professional. Let us begin where the basics end. You already know that a bank takes deposits and makes loans. But behind that simple idea lies a vast and intricate machine, one that must manage enormous risks, vast flows of money, and powerful technology, every second of every day. Today, we open the engine of that machine. We move from what a bank does, to how a modern bank actually works at the highest level. Let us begin. Our first great theme is the management of the balance sheet. A bank's balance sheet is not a static record. It is a living, breathing thing that must be actively managed every single day. On one side sit assets, chiefly the loans the bank has made, and the investments it holds. On the other sit liabilities, chiefly the deposits it owes to customers. The art of banking lies in managing the relationship between the two. This is called asset-liability management. Here is the central tension. A bank borrows short and lends long. Deposits can be withdrawn at any moment, but loans are repaid over many years. Managing this mismatch, between money that can leave quickly and money that is tied up, is one of the deepest challenges in all of banking. This brings us to the first major risk a bank must master: liquidity risk. A bank must always be able to meet withdrawals, even on its busiest day. It must hold enough ready cash and easily sold assets to honor every legitimate demand, while still lending enough to earn a profit. Too little liquidity is dangerous. Too much is wasteful. Our second great theme is risk management, which sits at the very heart of advanced banking. A modern bank is, in truth, a sophisticated machine for measuring and managing risk. Let us examine the major types. We have already met credit risk, the danger that borrowers do not repay. At an advanced level, banks manage this scientifically, using credit scoring, careful analysis, diversification across many borrowers, and provisions set aside to absorb expected losses. Then there is market risk, the danger that changes in interest rates, exchange rates or asset prices will cause losses. A bank that holds many assets and operates across currencies is constantly exposed to the movements of the market. And there is operational risk, the danger of loss from failed systems, human error, fraud, or external events. As banks grow more complex and more digital, managing this risk becomes ever more important. Now we arrive at one of the most important concepts in modern banking: capital adequacy. This is the cornerstone of banking stability, so let us understand it well. Capital is the bank's own money, the funds provided by its owners, and its accumulated profits. It acts as a cushion, a shock absorber that protects the bank and its depositors when losses strike. The more capital a bank holds, the safer it is. Because this is so vital to the whole economy, banks are required to hold a minimum level of capital relative to their risks. These international rules are known as the Basel Framework, developed to keep banks, and the global financial system, safe and sound. Understanding capital adequacy is essential for any serious banker. Our third great theme is how banks actually make their money, because advanced banking goes far beyond simple lending. There are two broad streams of income, and the balance between them matters greatly. The first is interest income, the spread between what the bank earns on loans and pays on deposits. This is the traditional core of banking. The second, growing ever more important, is fee-based and non-interest income. This comes from services, payments, advice, trade finance, wealth management, foreign exchange, and more. Because it does not depend on lending, it offers a more stable and diversified source of earnings. The modern bank is as much a service provider as a lender. This leads us naturally to the different faces of a modern commercial bank. There is retail banking, serving individuals and small businesses. There is corporate banking, serving large companies with complex needs. And there is treasury, the sophisticated heart that manages the bank's own funds, liquidity and risk in the financial markets. A great bank weaves all of these together. Now we turn to the force transforming everything, technology. Modern banking is, increasingly, a technology business that happens to handle money. This is perhaps the most important shift of our age. At the center lies the core banking system, the powerful software that records every account and processes every transaction in real time, across the entire bank. It is the digital backbone on which everything else depends. Around it has grown a revolution. Digital and mobile banking, instant payments, and the rise of fintech, innovative technology companies that both challenge and partner with traditional banks. In Africa especially, mobile money has transformed who can access financial services, and how. But this digital power brings new dangers. Cybersecurity has become mission-critical. A modern bank must defend itself relentlessly against fraud and cyber attack, for in banking, trust is everything, and trust depends on safety. And underpinning all of this is regulation and compliance. Advanced banks operate under strict rules, to remain stable, to prevent money laundering, to know their customers, and to protect the financial system. Compliance is no longer a back-office task. It is central to how a modern bank survives and succeeds. Now, why does all of this matter so deeply for Africa? Because strong, sophisticated, well-managed banks are the backbone of a growing economy. They mobilize savings, fund enterprise, and connect our economies to the world. And as African banking modernizes rapidly, the need for advanced expertise has never been greater. This is why skilled professionals are in such high demand. Risk manager, treasury officer, credit analyst, compliance specialist, banking technology expert. These are advanced, respected and highly rewarded careers, at the very heart of the financial system. So as we close, hold on to the essentials. A modern bank actively manages its balance sheet and its liquidity. It is, above all, a machine for managing risk, credit, market and operational. Capital is its cushion, guided by the Basel framework. It earns from both interest and fees. And technology, security and compliance now define how it competes and survives. Beneath every modern bank lies a world of remarkable sophistication. To understand it deeply is to hold one of the most valuable forms of expertise in the entire economy. At Nexus International University, Uganda, you can master it. Study advanced commercial banking systems through our hybrid learning and teaching model, online and on campus, built for the way you live and learn. Learn from anywhere, connect when it matters, and move forward without putting your ambitions on hold. Whatever your starting point, there is a pathway built for you. Enroll in a micro-credential to build job-ready skills fast. A bachelor's for your complete foundation. A postgraduate diploma to deepen your expertise. Or a master's to reach the highest level. One program to suit every stage of your journey. Expand your horizons at Nexus International University, Uganda. Enroll now. Visit www.niu.ac.ug today, and take the first step towards the future you deserve. Nexus International University. Boundless by design. Learn. Explore. Excel.